Hey all, how are you? My name's Adam Jason and I'm the founder of BRRRR.com. I'm coming to you today from beautiful Medellin, Colombia at my family's farm here. And I want to continue in this video today with part 2 of our 5-part series about raising capital from outside investors, if that's the strategy that you've decided to pursue for getting more assets into your portfolio. Meaning you've decided that you don't have the capital to do it on your own, you're not working with banks or other lenders, you're instead selling equity in the projects that you're doing and you're soliciting capital from other people who may be interested and can be those capital sources for you. So in the last video we talked about structuring, making sure you're getting your LLC set up, the common approach of one LLC to manage the property and another to be the actual investment vehicle where people are putting capital in, and that's the one that's owning the property. Today we want to talk about funding and acquisition strategy. So when we talk about acquisition strategy, you're really thinking about, okay, am I going to be asking investors to participate in projects related to a single asset, or am I setting up more of a fund structure where I'm going to present them with a general investment thesis, ask for capital up front, and then when projects come along that meet that model, that meet that thesis, I'm going to have their money on hand to be able to deploy that. The fund strategy is really more, you see it more with people who have developed a track record where they have proof of concept behind their investment thesis, and people see them as experts in the area and they say, okay, I trust you with my capital, go make deals happen for me. Chances are, if you're new to this, you're going to be looking at that single asset setup where you find a great single family property, or you find that multi-unit that you need some financial assistance with, and you're going to be going to investors with those deals and asking for their capital there. So you want to be very clear what the project is, what they're actually investing in, and what asset is going to be the basis for their returns when they invest with you. You also want to think about acquisition strategy and how you're going to finance these deals from the start. In my own business, what we do when we're taking on a new real estate project is put all the down payment in and then raise back out the money from investors and keep a portion in the project. Those are for large scale projects, $20 million hotels, that kind of thing. So everything has to have its own thesis, but should be driven by the amount of capital that you think your investors are going to want to see you leave in the deal and what the most appropriate strategy is. If you're somebody who can find a ton of deals, contribute on the construction work, all those kind of things, then it's possible that you're leaving a lot less cash in the deal, but you're contributing your sweat equity and your work. So whatever you're going to do there and what that's going to look like and what the repayment is and how you're going to finance the rest of the deals are going to be really important for giving your investors confidence doing things that way. So those are some traditional models of how these things are done, what the investors that you're likely to work with are going to expect, and the questions that you're going to get asked. So it's important to be prepared for how you're going to acquire the properties, how you're going to do the funding, and what the asset is, what's going to be the basis for their return. So I think these are two critical parts of, bringing a wholesale approach of how am I going to be able to raise capital from outside investors. So part 2 is here. Part 1, you can watch the video and we'll make sure it's included in the description of this video so you're not missing anything. Visit us at BRRRR.com if you're looking at BRRRR deals and want to analyze your projects. If you have them under contract and need to have the contracts that are going to put you in the best place financially with your contractors, property managers, all based on things that I've prepared, that I use in my own portfolio and that I did as an attorney and that my clients use, come over to BRRRR.com, check all that out. Make sure to subscribe to the channel so you see us in part 3, 4, and 5 of this series. And I hope this was super helpful for you. Leave your comments, questions, anything. I'll get back to as many folks as I can, and I'll see you in part 3. Thanks so much.